Good morning, everyone. This is Financial Literacy 101. And today we're going to break down essentially Zillow. And I believe there's a lot of money to be made with Zillow that you guys just have to go into some of the most basic common information that's out there: headline news, moving averages, RSIs, forecasted prediction prices, all of these things we're going to get into very quickly so you guys can go ahead and start investing because the market is now live. So let's see what we can do with this stock. Now, first and foremost, I really want to show you guys how you could potentially make some money here, because I was on Zillow just curious as I was researching the stock, looking at my old house in Spanaway, Washington. And it was very intriguing to me because I thought, hey, listen, my house is now worth $580,000 where I bought this house at $317,000. So we're talking almost double the price, and the Zestimate range is from $551 to $609. And they say here in the last 30 days that it has went up $10,000 when we look at it, which is 1.8%. And they said the Zestimate per square footage price is $203. Now, already a lot of people are trying to get away from this stock. Well, this stock has a lot to offer when it comes to the stock price. So we have to see the value in the website and how they conduct their business, essentially how their financials are essentially taken up. All of these things are great indicators for you guys to go out and buy some shares nonetheless. Now, as I'm looking at some of the bad news that came out over the course of time, ladies and gentlemen, let me tell you here, this is not where it is. Zillow cancels hundreds more homes across the country, right? The contracts, and they was giving away people's option money and earnest money. It says here, for a small subset of customers closing later in 2022, we determined we can no longer support their closing and are releasing out earnest money to them, said Zillow spokesperson Matt Creamer. Typically, home close to 30 to 45 days. Now, as homeowners are reaching out to the Phoenix Business Journal to share their frustration, and they're basically giving bad reports about how this stock is just simply not cutting it out. It's not really doing as well as they thought it would. I mean, from what it seems like, ladies and gentlemen, Zillow they own a large market share of the business when it comes to real estate listing, and the amount of agents that they have in contractual agreements that they can actually deploy in order to sell homes, if not acquire homes. Now, granted, Zillow is no longer offering cash payouts to buy people's home. They had to recoup some of that cash, and we're gonna get into the financials here to save money in order to still operate their business. Now, as we're looking at this, family, we see that Zillow is around $48 per share. Did you know in the last 52 weeks, Zillow was over $200 per share? But here in the past year, looking at a minus 68. In the past 3 months, it was down 48%, down 20% the past week, down around 10%. And in today's market, it's still down around 4%. Now, there are some things that we should be looking at here, right? Because if you're thinking already, well, I don't want to get into the stock because the price is too damn high, it's at $48, you have to see the long-term value, the long-term gain. And whether you've been doing a long call option or you're just going to do swing trading where you buy the stock right here at a very, very low affordable price at $48 per share and then hold on to it, maybe you'll make $30 profit per share. You wait till it gets around $80 per share, or you wait to its full potential, because predictions are coming out around at the highest point around $130 per share to $160 per share, okay? And on the median price, we're looking around 80% per share, but we'll get into that. So let's go over to CNN Business, and we see right here that on the low end, it has around $50. At the median, $83, a 62.5% increase. And then on the high end, $130 at 154.5% increase. These are all projected amounts. These are increases that you guys should be looking at. Nonetheless, now, as we go over to Robinhood, and we essentially look at The 52-week high was $212. The 52-week low, which we're currently right here, is $50. Okay, so now the new 52-week low will be around $48 per share. Now, the analysts on Robinhood are stating, and I'm just a little bit excited because I think you guys can really get in here on the low end and make some good profit. Buy at 32%, hold at 60%, sell at 8%, right? And then the bulls are saying there remains a decent runaway for growth, given the lack of consolidation in the real estate listing space. Zillow is building an ecosystem to capture consumers throughout each step of the home buying process. Zillow possesses the largest network of real estate listing platforms as measured by user traffic deriving from websites such as Trilio, Zillow.com, and Hotpads. So these are all ways that Zillow is making money. They want a end-to-end user experience. That's when you call building systems, right? Where you captivate and grab someone's attention 100% from end-to-end user, meaning that it's going to be the one-stop shop for you to look for a home, look for an agent, buy the home. Now, they have some remnants, okay? There are some bare bones about how they'll go about doing that right now, but they wanted to make it totally inclusive to Zillow. Just like you have the Apple ecosystem, you got the Apple Watch, you got the Apple phone. They're going to make it where everything is going to be Zillow, okay? But let's get into some other numbers that I think you guys may be taking fond of, and then I'll give you my synopsis. But look, the light is green. That means you guys can go ahead and buy. That is my pick. I think that you're going to make money off this stock. But nonetheless, let's get into the numbers of Zillow nonetheless. Now, as we look over here, we see that the stock has been down for quite some time. And the analyst rating here on WeBull stating that you shall hold it at 54.55%, that it's only been underperforming around 9%, buy at 22.73%, and a strong buy at 13.64%. But no analysts are stating to sell this stock. So do not sell Zillow. If you have it, hold on to it. Now, the average price target, according to WeBull, at the high, $160 per share, and average around $90 per share, and on low end around $50, which is currently teetering at, okay? We see that the EPS is slightly under a negative percentage, meaning earnings per share, the amount of money that Zillow has been coming in, but these are still great indicators that the stock is doing very, very well. Let's move on. Now, when we come to the other financials here, sorry about that, family. We're gonna come back to, I got lost here a little second here. Let's go here. Here we go. Sorry about that. So this is a better chart that we can look at to kind of get a better reference of how this stock is absolutely doing. So let's go down to net income. So for fiscal year 2020, the net income was a minus $162.12 million, okay? The total revenue was $3.34 billion, and then the operating income was a measly $40 million. And again, they had to retract a lot of their funds because they were spending too much cash and not recouping or profiting enough cash to keep their stakeholders happy. Now, the balance sheet, right? We see that the total assets are $7.5 billion, the total liabilities, which they essentially owe, and the debt to asset is around, let's just round up to 40%. But nonetheless, they have roughly around $5 billion in profit. They're sitting there. So they have a lot of money. They can do a lot of things with that particular money. Now, cash flow, we're looking at operating. Operating is around $424 million. Amount they're investing is around $1 billion. And then financing, we're looking at $1.16 billion. And if you're looking at the year of year, we're looking at a 28.94%, rounded up to around 29-30% nonetheless, okay? Moving right along. And then in news, I didn't really see anything that really point anything out except mortgage rates rise to pandemic era high as investors expect Fed to get aggressive on inflation. Now, family, we have to understand that inflation prior to 2019 was fluctuating around 1.8 to 2.1%. Currently, inflation has been teetering around 3.5 to 5.6%. And that's why they said the feds need to come in and they need to adjust for inflation, because in this current market, tech stocks are going down. I mean, a lot of things in this market is so unconventional. It's a historic moment because of the pandemic, nonetheless. And so, even though the housing market is booming, majority of the stock market is not doing so well, family. I'm just going to give you a small example. I'm going to look at my horrible portfolio that I haven't changed. That anytime, if you're a great investor, you change your portfolio. But then again, if you have stocks, you just have to wait, okay? One of the key things about investing is patience, and a lot of people do not have patience, okay? So you have to exercise patience. Now, as I look at my portfolio, guess how much I'm down today? I'm down around $2,000. And I know some of you are saying, ouch, that's a lot of money. And it is. But it's something to marvel at, because the amount of patience I have is running thin. And I really need to do something before this goes too bad, too quick, okay? So, let's see here. With that being said, family, let's look at this. Now, as we're looking at this stock currently, Zillow, and you want to know my take on it. Is Zillow a good buy right now? When we think about profitability, we think about cash flow, we assume that the housing market doesn't fall off the cliff in 2022. Zillow is going to do really well. It really is. I mean, at the low end, you probably make $30 per share. The profits are probably going through the roof, even if the revenue, I mean, the growth is likely going to be great. Now, right now, the stock is not a great place to be, but I mean, the last 10 years, Zillow has been doing very, very well. Now, there's some questions that people are asking, like, what's the Zacks rating? Currently, the Zacks rating for Zillow is around 25% when it comes to a strong buy, 18% when it comes to a buy, 10% when it comes to the hold, and only 6% when it comes to a sell. So all the indicators here are telling me buy, buy, buy. And I have to listen to the numbers. Zillow, believe it or not, still has a lot of cash to do a lot of things. Okay, so when we look at this, family, and I'm gonna show you one more time because I think it's important. It's buy, buy, buy. Let's look at this. So when we look at this, we see that there's no doubt. Messing up here. Here we go. There's no doubt that you guys can go over here and make some really good money. The analysts on WeBull, the analysts on Robinhood, the analysts on CNN, the analysts on Zacks, every analyst saying buy. You know why? This is the classic case of when stock investors potentially dump their stocks because of the way the market is heading. And when that stock dropped to one of the lowest that it's ever dropped before, this is when they go in and buy up large amounts of shares. I wouldn't be surprised if Kathy Woods goes into Zillow and buy a large number of shares. I really would. Because I kind of want to look over the course of the year, or from the stock inception, how much this stock actually, started off with. And granted, there are two stocks. You have your Zillow Class A and you have your Zillow Class C. Now, if you want to be able to vote, depending on the amount of shares, one stock equals one vote. Meaning, when these guys come out with their quarterly earnings, and that's why you see your mentor investors, your mega billionaire investors like a Kathy Woods or Warren Buffett, they go in and buy hundreds of thousands of shares because each share gives them a vote of how they want the company to run. So essentially, they own the company. Anytime you own more than the underlying asset of the owner, meaning the shares that person has, you essentially own the company because you have the majority share. That's simple. That's why most people always want to maintain 51%. Now, there's a lot of small business owners out there that try to acquire loans and things of that nature, and you don't want to give too much of your business up too soon before it really takes off the ground. And I understand that. But depending on how much you project your business to be worth, how much you're asking for at the percentage that you're going to repay someone, if that includes royalties or not, you're going to give at least 20%, right? 100,000, 20%. But I would tell you this, never ever give someone more than don't give no one more than 50% of your business. That's why most people will say, hey, I'm willing to go 49% unless you guys are equal partners, okay? So let's go back over to Zillow and let's look at this one more time. All right. And I'm just go from inception here. So Zillow back in February 2017 was worth $36.42 per share. So even those who got in on the low end still have made a large sum of money. Now we see a spike here when the market was doing very well in 2021 of last year, and the stock reached $202 per share, an increase of $165, 442%. So with that being said, do not be a frail, scared investor. Have patience. We're either going to do a long call option, or if you want to get in on some earnings right now, you can do some put options. But for swing traders and long-term traders, the green light is on. That means that you guys should be investing. Don't worry about the stock price. With these new millennial platforms like WeBull and Robinhood, they have changed the entire investing market, where you have old traditional like Ameritrade and Fidelity and Charles Schwab. They also doing micro and fractional investing as well. This is Financial Literacy 101. Learn money and be inspired. You guys have a great and wonderful day. I'll see you on the next one.